So hello everyone, welcome to CA Panel Audit Free Fast Track batch. In this batch, we are going to cover entire audit with 100% question answer using our magic book. In this book, we have summarized entire audit only in the 320 pages with 100% question answer. You need not to refer separate question bank. Everything is covered in this book. Okay, with lot of memory technique also. If you want this book, you can get it from the shivamnagpalclasses.com, right? And this is the part number C for the bank audit chapter, right? If you have not watched till now the part number A and B, so first watch them, then watch this lecture, right? This is the part C for the bank audit chapter. So in this lecture we will end this chapter. Point number 10, verification of the other assets, right? It will cover the inter-office adjustment or the non-banking assets acquired in the satisfaction of the claim. So let's understand what do you mean by inter-office adjustments, right? See here. Okay. So the inter-office adjustments means the difference on account of incomplete recording of transactions between the one branch and the other branch or the head office. Many a time different branches or the head office do a transaction between them, right? So any difference on account of incomplete recording of transaction is called the inter-office adjustment, right? It may be the debit balance or the credit balance. Only in case of this is an incomplete line, so it can be debit balance or the credit balance, right? Now see here, how to verify this? Examine whether, okay, see here. So in our audit magic book, as you can see, the chapter bank audit that we are covering right now, and this will come in your exam for the 5 marks only. Okay, and we have covered everything in this book, notes and question, everything is covered. Still the syllabus is too vast, so how to cover this chapter? Okay, in this chapter where a memory technique is given or where a question is given, that part you have to learn 100%. That part you have to learn 100%. Where any question is given with the answer or where any memory technique is given, right? So that part you have to learn 100%. And where only you can say no memory technique is given and no question, that part you can just read. Just read for this chapter, for the bank audit chapter. Okay, where memory technique is given, any question is given, learn 100%, or where any no memory technique is given, then just read. Just like this topic. Okay, no question, no memory technique, just read this. Okay, not important. So in this way you can cover this chapter, right? See here. So how to check the inter-office adjustment, right? So examine whether normally it is reconciled at the central level and report on year and status, indicating the dates up to which or any adjustment, any segment of accounts reconciled. Indicate the number and the amount of the outstanding entry, giving relevant information separately for the debit and credit entries. Okay, whether all the amount is shown or not, all the adjustments are made or not, check that and ensure that any discrepancy is found. Okay, while making them their adjustments, right? And these are properly dealt in the books of account. You can write here book of account, books of account. Okay, now for the non-banking asset acquired in the satisfaction of the claim. So what do you mean by the non-banking asset? Let's understand this. It means non-financial asset, you can say. These are the non-banking assets and have a physical manifestation, as in machinery, equipment, real estate, inventory, or vehicles. And these are the type of the assets which are acquired by the bank to settle their debts. But it means, okay, bank have given the loan against this, loan against this. Means the machinery, equipment, real estate, land, inventory, vehicle, etc. So when the borrower have not paid that loan back to the bank, then the bank taken the possession of this, right? So These are the non-banking assets which are acquired by the bank for the satisfaction of claim, because bank are not able to recover the loan from the borrower, so they take their asset. Now, ensure that heading include asset which bank has acquired in satisfaction of the debts due or its other claims, plus held with the intention of disposal. Okay, so this asset part cover the only those assets which bank have acquired for their claims, right? And these are for the disposal purpose. Okay, because a bank cannot do the business of holding the land building and selling them, right? Their main business is doing the banking. Okay, so all these assets are those which are acquired for the satisfaction of the claims and for the disposal purpose, not for the holding purpose, for the disposal purpose. Now, ensure at the date of acquisition, ensure at the date of the acquisition the asset recorded at the lower of book value of the advance or the NRV of the asset acquired. Okay, let's say the book value of the advance is 1 lakh and the NRV of the asset is 80k. So we have to record lower of both. Okay, we have to take the 80k here. Okay, if the value of asset is 1.2 lakh, then we will take the 1 lakh only. Okay, whichever is lower, asset NRV value or the book value of the debt, whichever is lower. Okay, ठीक है. Now, verify such assets with the relevant documentary evidence. Check the ownership of the property are legally vested in the bank. Okay, now the bank become the owner of this or not. We have to check that. Ensure the compliance with the section number 9 of the bank. It's prohibit from holding the immovable property. Okay, a bank cannot hold the immovable property. Their business is doing the banking now, right? But they acquired for more than 7 years from the date of acquisition, except for the own use. Okay, a bank can hold the property only up to the 7 years. Okay, but except for their own use, they are using them for their own office, then they can hold. But for the other purpose, just like they acquire from any borrower, they can hold only up to the 7 years. Okay, not more than that. Their own property is allowed. Their own office property is allowed. That is allowed, right? Okay, just read this. Not important for the example, but maybe MCQ ask for this topic. Remember the memorize 100% memory technique questions or the where question is given. Where no memory technique is given, where no question is given, just read like this. Okay, ठीक है. Now, the next point is about the verification of the capital adequacy. Okay, see here. So what is this? Now see here. As we know that, let's see here. This is balance sheet. Okay, we are chartered accountant. We know that what the balance sheet is. They should come for the bank asset. What are the bank assets? That are the loan and advances. Loan and advances. Those are given by the bank to their borrowers, right? And these will there will come the bank capital. You can say investor capital. Spelling mistake हो गया. Let me correct this. Investor capital. Okay, you can say investment made by the investors, right? Now, and there the other liability of the bank is CASA, current account, saving account, or term deposit. Okay, the money invested by you, deposited by you in the bank, that's like current account, saving account, term deposit, etc. These are bank's liabilities. Okay, now let's assume that this borrower did the default in paying that money. Did default in paying the money. Okay, so how the bank cover this? Because they have to return your money also, na? your money is used for paying, giving these loans. Okay, your CASA money, your saving account money, current account money, and the term deposit money is used for paying the giving these loans to borrowers by the bank, right? If these borrowers default in repaying that money, okay, so in that case, how the bank can repay to you? How the bank can repay to you? By using their own capital. Okay, by using their own investment capital. By using their own investment capital, right? So bank should have enough capital. That means the bank should have enough capital to reduce the risk in their business. Okay, otherwise their business get shut down. Okay, if the borrower did the default, they are not able to repay to you for the current account, saving account, term deposit. Okay, so if the bank are not able to repay to the current account holder, saving account holder, TD holders, in that case the bank will get shut down. So bank should have enough capital for maintaining to remove the risk from their business, right? See here. So for this purpose, there is a capital adequacy system. Okay, we call it. Bank have to maintain a capital adequacy ratio. There are three types of capital adequacy. First is the capital adequacy. Second is the stress testing. Okay, this is only one. Stress testing framework and the Basel III framework. This is global level. Global level. So all these three are talk about that ki bank have to maintain a certain level of capital to remove the risk from their business. Okay. Now let's study about the capital adequacy. So it is a ratio. Okay. The tier 1 capital plus में tier 2 capital by में risk weighted asset. Here mainly come their share capital and their reserve etc. and the by risk weighted asset. Just like bank have given a loan for a 50 lakh and there is a risk of 50%. Then we'll do the 50 lakh into me 50% risk with the weighted asset. Risk weighted asset. Risk with the loan given, right? So this will not be asking in your exam to calculate the this formula, using this formula, the amount or that. No, only theory will come in your exam. Okay. So the term meaning. What do you mean by the capital adequacy? The adequacy of the capital resources plus risk associated with its operation. So they have to maintain the enough capital so that to reduce their risk also. So tier 1 capital cover the share capital plus disclosed reserve. Okay. Plus में tier 2 capital that contain the certain reserve and the certain subordinated debts. What do you mean by subordinated debts? See here. So subordinated debt, also known as subordinated debentures, as unsecured loan or the bond that rank below the other more senior loan or the securities with respect to the claims on the asset and earning. Subordinate debentures are thus known as the junior securities, as we know that when a company gets shut down. Okay, so there is a process. First of all, the debenture holder will get money. Okay, first of all, their expenses are paid, debenture holder get money, then the preference shareholder get money, then the equity shareholder get money. There is a process. Okay, so when the debenture holder get money, there are two types of debenture, you can say. Okay. Okay, out of which one is the subordinated debt. That means a junior security. These are ranked below the other security. Okay, you can say there is a complete debenture, those having the complete claim over that, and there is a subordinate. So first of all, amount is paid to this, then to this subordinated debt. Okay. Now only remember this: the tier 1 capital cover the certain reserves. What reserve they cover? You need not to remember that. Okay. only this is covered in your syllabus, only theory will come, not any question will be asked. Certain reserve and the certain subordinated debt, this only. So tier 1 capital, tier 2 capital, by में risk weighted asset, risk with the percentage of risk with the asset alone given, right? So component of the capital CRAR, capital risk adequacy ratio, capital risk adequacy ratio. So capital fund, by में risk weighted asset and the off balance sheet items into में 100. Capital fund tier 1 and tier 2 by में risk weighted asset and the off balance sheet items into में 100. This is the formula. So RBI require the minimum CRAR of the 9%. It can be asked in MCQ also on an ongoing basis. So risk weighted for the housing loan is 50% and the loan of 60 lakh is given by the bank. Then the risk weighted asset is the 60 into 50% is equal to me 30 lakh. Okay. For this part, 60 into me 50% into me 30 lakh. Here tier 1 capital, tier 2 capital, plus me off balance sheet items. Okay, this is the formula. Only theory will be asked in exam. So why the bank have to maintain the certain capital level? Okay, so that to ensure the continuity of the bank. Now the next one is the stress testing framework. All the commercial bank, including the RRB and the LAB, regional rural banks and the local area banks, you can write here local area banks, would place a board approved stress testing framework. Okay, so what is the stress testing framework? See here. So it is a framework which considers all these points like economic capital, net income, reporting requirement. So this is a complete framework that you need to remember. This is not in your syllabus. That's a reference come in your syllabus. Okay. They have to consider the credit risk, market risk, liquidity risk. So considering this, they have to maintain a certain level of capital. Okay. So that ensure their continuity in the bad days. Okay, you can say. So the stress tests are designed to understand whether the enough capital to survive the adverse economic conditions plus maintain the enough buffer to stay afloat under the extreme scenarios. Okay, so all these three are all about the maintaining a certain level of capital to ensure the continuity in the bad days, in the adverse economic conditions. Is it clear? Say yes. Okay. Now, Basel III framework. This is a global level, you can say international level framework. International level framework. Okay, so let's read this. Now first see this. So it has a Basel III framework. It has three pillars: pillar 1, pillar 2 and the pillar 3. The pillar 1 says enhance minimum capital and the liquidity requirement. So the pillar 1 talk about that the bank have to maintain a certain level of capital, enough capital. The pillar 2 says enhance supervisory review process for the firm wide risk management and the capital planning. So let's talk about the review for the risk management. And the third pillar talk about the enhance risk disclosure and the market discipline. So they have to disclose their risk that they're going to face in future, etc. Okay, maintain the certain level of capital, do the risk management review, etc. and disclose the risk that they are going to face in future. This is a Basel III framework. Okay, so it is a global regulatory standard. Capital adequacy requirement compliance, same, maintain the certain level of capital for protection of the depositor and the shareholder. The reason behind this is protection of depositor and the shareholders. So the Basel III report aimed at, okay, it has three pillars. The first pillar says we have to maintain the certain level of capital. They have to maintain the certain level of capital, improving the banking sector ability to absorb the shocks arising from the financial and the economic stress by maintaining the certain level of capital. The pillar 2 says the risk management and the governance practices, improving these practices. The third step says the disclosure about the disclosure. Then think there are bank transparency and the disclosure standards. Okay, right. This is important, you can say. Many times it is asked, this is important. Now, verification of the deposits. These are the CASA or the term deposit. CASA means current account and the saving account, and the term deposit means it's like FD, etc. Okay, so let's read CASA. So for the CASA, how to verify the same? Okay, see here. Verify the sample basis account. Open it in the period for the adherence to the KYC norm. Okay, not verify all the account, verify on the sample basis. Also adherence to the KYC norms. These are followed note, check them. Verify the balances in usual accounts on the sample basis. Again, check the calculation of the interest on the test check basis. First of all, check the compliance of the KYC, then check their account balances, etc. Then check the interest. KYC, account balances, interest. Now, examine if the periodic confirmation obtained. Check on the sample basis for the balances. Right? And debit balance not set off must be shown as an advances. Sample check the inoperative or the closed accounts. Many times this happen, a person not doing a transaction in the account. Okay, there may be 1,000 rupees, 500, 100 rupees are pending in the account. So sample check them. Those accounts are inoperative or the closed account. Right? Here. Now TD, that means the term deposit, FD, etc. So verify the interest. Bulk deposit 2 CR or above. Okay, for the 2 CR above, check their interest. In case of the closure of the term deposit, foreclosure penalty deducted. Okay, so if you have deposited some money in the FD for the 3 years, but you want to get this amount in the first year itself. Okay, you want to break the FD. In that case, a penalty will be imposed. Check this. Verify a sample basis. Some recurring deposit account. So what do you mean by recurring deposit account? TD means the FD. So what do you mean by recurring deposit? So the recurring deposit is an account in the bank or in a post office. It can be in the bank, it can be in a post office, where a depositor deposit a present amount of money every month. Means recurring payment, recurring deposit, not one time, for a fixed time period. Just like for 2 years, 3 years, every month he will pay the 5,000 rupees, just like this. It kind of FD, but it is a recurring deposit. Fixed amount deposit every month, 5,000 rupees. Just like we can do in the case of the mutual fund, SIP, systematic investment plan, just like that. Okay, recurring FD. Now, verify the correctness of the rate of interest on the term deposit. They are in case of 2 year, 1 year, 5 year, 4 year, rates are different. So check the rate applied is correct or not. So the next point is verification of the other liabilities. Right? See here. Again, there is a question. This is very, very much important. You have to memorize. Memorize this, and there is also memory technique. So while doing the audit of a bank, your audit assistants inform you that there are a lot of irregularities in the telegraphic transfers and the demand drafts. Telegraphic transfer and the demand draft, TT and the DD. So what guidance would be given to the audit assistant regarding this for checking the TT and the DD? There can be bill payable, there can be TT and the DD. For this question, you have to answer only this part, only B part, for the TT and the DD. But these are bank other liability which cover the bank bill payable and the TT and the DD. But for the answer of this question, you have to write only about the TT and the DD. This is clear now. See here. So let's see the bill payable. It covers the draft and the mail transfer made out in a standard printed forms. So what do you mean by the draft? Now see this. The draft means a bank draft is a payment that is guaranteed by the issuing bank. It is a kind of guarantee. The draft is a kind of guarantee that is given by the issuing bank, and the bank drafts are often used for the large payment such as down payment. You can temporary guarantee given by the bank, temporary guarantee given by the bank for the one time, and bank verify and withdraw the funds from the payer's account and deposit that amount in a internal account. Just like bank have given guarantee for the 5 lakh rupees. So a depositor having the money with the bank, so bank transfer the money deposited by that payer with the bank to a separate account for giving that guarantee. It's a kind of draft, right? So check their standard form and unused form kept under the custody of the responsible officer. This is simple. Now this is important. Evaluation of the TT and the DD. So what do you mean by TT and DD? Understand this. So what is TT and the DD? The instrument of the remittance include. These are the instrument of the remittance. Remittance means for the sending money from the one place to the other place, just like UPI, right? So it's a kind of remittance system which include the telegraphic transfer and the mail transfer and the demand transfer, DD, TT and the MT, among which the telegraphic transfer and the draft transfer are most used commonly. ठीक है जी. Now typically a telegraphic transfer is complete within the 2 to 4 hours business days, 2 to 4 business days, and depending on the origin and the destination of the transfer. So this TT and DD are used for the sending money to the foreign. UPI we use in India, but this TT, telegraphic transfer, and the draft transfer, mail transfer are using for the sending money to the foreign, mainly in the foreign currency itself. So this telegraphic transfer is a complete within the 2 to 4 business days it will take, depending upon the origin. You can say in India is origin and the destination is the America, you can say, of the transfer, as well as any currency exchange requirement. It depends upon that. The telegraphic transfer are also known as telex transfer, also as a wire transfer or the electronic fund transfer. Okay, this is clear to you what do you mean by TT and the DD and how it works, right? Now come to the magic book. See here. So how to check this? What to check here? We have to check the 2CS confirmation whether received or not. 2CS confirmation, again 2CS confirmation, CC, SS and the confirmation. So by C means codes for the TT known only to the responsible person, just like happen in case of the checks. Okay, on check there is certain code. As I said in the our last class, I got a check from my principal for my articleship stipend. Okay, so there is some code on that check. So similar to that, there is some code on the this TT and the DD also. So check this code are known to the responsible person only. By C means coding and decoding of telegrams done only by the authorized person. Just like in case of check happen, their coding and decoding is done, sign checking is done, batching is done. Similarly here, its coding and decoding of telegraphic transfer are done by the authorized officer only. By S means signature on the document used for the TT and DD are checked by the officer with the signature book. You can see just like it's a check. Okay. Now all TT and the DDs are sold by a branch immediately, confirmed by the advices to the branch concerned. That means we have to verify from the branch whether these are sold by them or not. If paying branch not received the proper confirmation of TT and DD from issuing branch, you can say from the American branch is not get the confirmation of TT and DD from the issuing branch in India, or does not receive the credit in its account with that branch, it should take immediate step to know the reason, right? These are simple points you have to memorize. 2CS confirmation. Okay, these are important where memory is given. Now this is also important. So contingent liabilities. So while auditing the fair bank, you observe that the some amount, lump sum amount, disclosed as a contingent liability collectively. You are requested by the management to guide about the disclosure requirement of the contingent liability of the banks. Right? So the contingent liabilities disclosure requirement, it covers the Goa liability note paid. Goa liability note paid. By G means guarantee given on behalf of constituents. Many a time bank give the guarantee. These are the part of the contingent liability of the bank. It can be for the Indian or the outside India. Now, you can say the liability that may arise in the future, contingent liability. So guarantee is covered here by G. By A means acceptance, endorsements, and the other obligations. So what do you mean by these terms? Let's see this. So the acceptance, endorsements, and the other obligations basically represents the bill accepted or endorsed by the bank on behalf of customers. Simple? Okay. Now, by O means other items, that is contingently liable. Okay. Goa liability note paid. By liability means liability on account of forward exchange contract. Many time bank enter into this type of contract for the foreign exchange, right? So these are the contingent liabilities. Or note paid. Claims against the bank is not acknowledged as debts. What do you mean by this term? Let's see this. So what does the claim against the bank is not acknowledged as debt? So when a claim is made against the company but has not yet been acknowledged as a debt, okay, the liabilities almost arise. You can say the liability is almost arise. That we have to pay in the future. Okay, that means that is not acknowledged as debt. The liabilities arise but have not acknowledged till now. We have to pay in the future. These are contingent liability. This is a contingent liability. This means the company recognize the possibility of having to pay the claim in future, but it has not yet been formally recognized as an obligation. This is not an obligation, but can be paid in future. These are contingent liability. In the future, we have to pay. Okay. So check these claims and liability for the partly paid investment. Okay. So the Goa liability note paid. Goa liability note paid. These are the contingent liability. So what are the audit procedures to check the contingent liability, to check the claim against the bank not acknowledged as debts, check the guarantees, check the acceptance, endorsement, and other obligations. Okay, the audit procedure for this that we have to follow. One second. Now, so for the contingent liabilities, okay, these are again, you can say this point is important, 20, otherwise just read all these points. These are the basic procedure that you can write by your own words also. Okay, not so important. This is also not so important. You can write in your own wordings. Just read quickly with me. So for the contingent liabilities, ensure the non-fund based facilities or the additional ad hoc limit. Non-fund based facilities like letter of credit हो गया, okay, guarantee हो गया, guarantee, or the ad hoc limit, you can say extra limit, given only to the regular customer. Okay, so bank can give the letter of credit, guarantee, extra limit only to the regular customer. Okay, not to anyone, to regular customer only. There is high risk. Ascertain the adequate internal controls. Verify in case of letter of credit the payment to the overseas supplier as per the shipping document. So what do you mean by the letter of credit? So what is a letter of credit? A letter of credit is a contractual commitment by the foreign buyer bank to pay It's a contractual commitment by the foreign buyers bank to pay once the exporter ship the goods and represent the required documentation to the exporter bank as proof. So foreign buyer bank, it's like you can say in India there is a buyer and its bank in India. This bank will pay to a foreign bank, to a foreign person who is exporting the goods. A person in the foreign is exporting the goods. A buyer in India is importing the goods. A buyer in India is importing the goods. A seller in the foreign is exporting the goods to the India, right? So the buyer bank in India will give a letter of credit to a exporter bank, to a foreign exporter bank. Once this exporter submit the document with the exporter bank that they have made the export to the India, after that the Indian bank of the buyer bank, you can say, will give the letter of credit. That means you can say a type of guarantee that this person will pay to this exporter later on, right? This is a contractual commitment by the foreign buyer bank in India, means Indian bank, to pay the when the exporter ship the goods and present their required document to the exporter bank as a proof. Okay, so it has a finance tool. The letter of credit are designed to protect the both exporter and the importer. It's like a guarantee given by the bank on the behalf of Indian buyer. The guarantee given by the Indian bank on the behalf of Indian buyer to the foreign exporting bank. This is clear. This is letter of credit. So check this letter of credit payment to the overseas supplier as per shipping document. Now, whether the internal controls ensure the contingent liability properly identified and recorded. Test completeness of the record obligations, review the reasonableness of the year and the contingent liability in light of previous experience. Let's say last year it is 2 CR, but now it is 1 CR. Maybe last year 2 CR, now it is 5 CR. So check, compare it with the previous years also. Okay. Now, review whether the comfort letter issued including in the contingent liability. Any comfort letter given by the bank is also covered in the contingent liability. Now, what do you mean by the comfort letters? So, what do you mean by the comfort letter that is given by the bank? So, a comfort letter is a document issued by the bank on the behalf of its customer or buyers to a supplier to assure the supplier of the financial ability and legality of the buyer in maintaining the consistent trade. So it's a document that is issued by the bank on the behalf of client buyer. A person is buying something from a supplier. So it's a document given by the bank on behalf of buyer to a supplier, on behalf of buyer to the supplier of the goods, that the buyer will repay his money. The buyer will pay the money for that goods purchased by the buyer. That's like a guarantee, you can say. Again, this is a guarantee. You can say letter of credit in India, you can say it's a guarantee given by the bank. So it should be also be covered under the contingent liability, because if that person not pay that amount, this buyer not pay that to the supplier, then in that case it becomes the liability of the bank. This is a future liability of the bank. This is a contingent liability of the bank. 100% clear? Say yes. Okay. Now, check this. Now, claim against the bank are not acknowledged as debts. Examine the relevant evidences, correspondence with the lawyers or the workers, whether any case is going on against the bank that they have to pay any money in the future. Review the minutes of the meetings of the BOD, any contracts, any agreements. Ascertain from the management the status of the claims that those are outstanding at the year end, and review of the subsequent event after balance sheet event, you can say, its completeness and its valuation. Now, for the guarantee, there is a question. So while doing the audit of the bank branch, your audit assistant inform you that he suspects some irregularities in the guarantee issued by the bank. So what's your guidance in this matter to check the same? So how to check the guarantees, your audit procedures? These are the check the internal control over the issuance of the guarantees. Control over the unused guarantee forms. These should be under the custody of the responsible officer. Examine the guarantee register also. The procedure for the marking of the expired guarantees. Check the guarantee register. Ensure all are included in the disclosure. If claim risen, then it should be as per the ES9. Okay, these are basic provision, accounting provision that you can learn. For the acceptance, endorsement, and the other obligations. For that, you have to evaluate the adequacy of the internal control. This is a basic point. You have to check the internal control over the issuance of the letter of credit, custody of the unused letter of credit form. Okay, you can see the LC. Acceptance, they are talking about the LC here. You can see letter of credit, acceptance, endorsement, and the obligations. Verify the balance of LC from the register maintained. Examine the guarantee plus letter of credit issued by the bank. Security obtained for issuing the letter of credit and verified. Okay, bank is giving the letter of credit for the that money that a bank will pay to the foreign bank. So check the security sheet for that. And the potential financial obligation on issued letter of comfort. Right? So the basic point, not so important these are. You can just read. Okay. Now, for the auditor report. In case of nationalized bank or the SBI, the auditor will give report to the central government. Again, in case of nationalized bank or the SBI, the auditor will give the report to the central bank. Say yes. Okay. So what will be the content of the audit report given by the auditor here? It will cover the balance sheet. Okay. So what will be the content of audit report? Balance sheet, profit and loss account, plus the explanation. These are the basic things that we know. It covers the balance sheet, profit and loss account, and the explanation, right? It also covers the returns, power, and the other. You can say RPO, balance sheet, profit and loss account, explanation. These are basic things. Plus में RPO, return, powers, other, returns, power, other. Okay, learn using this technique. Important question. Now, see here, the content of the audit report. So whether the balance sheet is full and fair, containing all the necessary particulars and properly drawn up to exhibit the true and fair view. The balance sheet is giving the true and fair view. Balance sheet. Then profit and loss account. Whether the profit and loss account shows the true balance of profit and loss account. Now, explanations. So in case the auditor has called for the explanation, whether given or not to the auditor, or is satisfactory or not. Right. Now, return, power, other. Balance sheet, profit and loss account, explanation is done. Plus में RPO. So R means returns. Whether the returns received from the offices and the branches are adequate. You can say information, data, received for the audit are enough or complete or not. Right? Power. So all the transactions done by the bank are under the power of bank or not. Whether or not the transaction of the bank are within its power, that we have to check. Plus others. Any other matter the auditor should consider and brought to the notice of the central government. Okay. So balance sheet, profit and loss account, explanations, and RPO, return, power and other. That's all. Okay. Important है क्योंकि यहाँ पे मैमेटिंग में गिवन है. आ जाओ आगे चलते हैं. So long form audit report, LFAR. The date is 30th June. This is date of this report. Can be asked in MCQ. Date of this report. So LFAR, long form audit report. So it should be applicable to all the bank, including its branches. Again, it should be applicable to all the banks, including its branches. It will cover these points. Okay. So given by the statutory auditor as well as SCA. Okay. It will be given by the statutory branch auditor along with the central statutory auditor. So for the branch auditor, it is in form of the questionnaire where the observation and the comments provided on the cash, balance with the bank, investment and advances. For the branch auditor, it is in form of a questionnaire that cover the point about the observations, comments on the cash, balance with the banks, investment advances. Simple. These are submitted by the statutory branch auditor. So branch auditor fill this questionnaire about the balances, investment advances and submit this to the SCA, Central Statutory Auditor. The branch auditor submit this to the SCA, submitted by the statutory branch auditor to the statutory central auditor, and its consolidation to be done at the head office level. The long form audit report for the bank is submitted by the SCA to the management. Finally, complete file. After due examination, placed before the audit committee and board of director. You can say ACB, audit committee, board of director. ACB also you can say audit committee and the board of director of the bank, indicating the action taken or proposed for the rectification of the irregularities, if any. Now, the copy of LFAR and relative agenda note, board's view, directions is submitted to the RBI within the 60 days of submission of the LFAR by statute. The date of LFAR is 30 June. Okay, done. Right. Note, in case of fraud, report to RBI and report to the chairman, MD and CEO of the bank, or the CG reporting under the 143(12). Fraud more than 1 CR. Now, that SCA have to furnish the following report in addition to the main report. These are the special purpose certificate that they have to issue. So what they covered here: report to the ICR, internal control over financial reporting, internal control over financial reporting as per the 143(3)(I) of the Companies Act, that we know that we have studied in the inter also, or the long form audit report above one. Okay, so these are the reports which are given by the SCA in addition to the main report. Remember the point. Now the third one says report on the compliance on the SLR requirement, statutory liquidity ratio requirement, report on the income recognition, asset classification and the provisioning like standard, substandard, etc., and report on the fraud 143(12), 1 crore wala, or asset liability management. These are the additional reporting. Okay, in addition to main report. This report plus में this additional report. These are 6(1). This 6 plus this 6. One second. Okay, these 6. Now, so there is a note that auditor ensured that not only information for the number of unaudited branch is given, but the quantification of the advance, deposit, interest, income, expenses for such unaudited branch will also be given. Remember this. It can be asked in MCQ. Important point hai. Now, the topic of concurrent audit. So what do you mean by the concurrent audit here? It means the audit or the verification of the transactions, activities of an organization are concurrently as transaction activity taken place. Okay. Concurrently as these are taken place means transaction taken place, it should be audited. Side by side audit. You can say side by side audit. It is not a per-audit. That means first this is done, then again audit is done. Okay. These are the side by side audit. Side by side audit. Along with the transaction, this audit is done. So the scope of the concurrent audit in the bank. Explain the scope of concurrent audit of the bank with reference to the RBI guidelines. See here, its scope clearly and uniformly determined for the bank as a whole by the Bank Central Inspection and the Audit Department, in consultation with the bank ACB, the audit committee and the board. You can say audit committee and the board. You can write here also. So it should be determined by the bank Central Inspection and the Audit Department by consulting with the bank ACB, audit committee and the board. Is it clear? Right. Now see here. In determining the scope, the importance should be given to checking the high risk transactions and having the large financial implications as against the transaction involving lesser amount. Okay, we should cover the in our scope only the high risk transaction, high amount transaction, by ignoring the small amount transaction. This is the basic thing. Okay, now it covers the cash, deposit advances, investments, foreign exchange, housekeeping, other. Right? Now see here, coverage of the bank branches or the bank businesses. So scope of work of the current auditor plus its coverage left to the discretion of the head of internal audit or prior approval of the ACB. They will decide this. Ensure the risk sensitive areas identified as per the specific business model and the broad coverage based on the identified risk and random testing. Okay, check the area having the high risk or do the random testing also. Now the next point says the appointment of the auditor and its accounting ability. Who can be the concurrent auditor? Now the answer is option to appoint with the bank. Okay, bank have the option to choose the concurrent auditor. It can be bank staff also. It can be bank's own staff also, or the external auditor, just like us, right? But discretion of the individual bank, they have the power to choose. Okay, if their own official, then it should be experienced. They have the knowledge, well trained and sufficiently senior. So the ACB decide the max tenure. ACB means the audit committee and the board. The audit committee and the board decide the max tenure of the concurrent auditors should not be more than the 5 years on a continuous basis and not allowed to continue with the branch for more than period of 3 years. Okay, can be asked in MCQ. If the external firm serious act of omission and commissions, okay, you can say done by the CA and they are not doing their work properly and that is get noticed by the bank, their appointment get cancelled. Okay, also they report to the RBI and the ICI about us. They are not doing their work properly. Okay, they file the complaint against us. This is clear. Now, reporting system, structure, format, how we should report, how a concurrent auditor should report. The format should be structured. Major, oh, just read this, not important. Okay, major deficiencies noticed by him, highlighting in a special note, reporting immediately to the bank offices. Quarterly review containing the key features placed before ACB. Zone-wise reporting pertaining to the ACP, annual appraisal report, etc. Minor irregularities, serious वाली हो गई, fraudulent transaction detected, follow up. Okay, just read this. These are the reporting system for the concurrent auditor. Now, the audit procedure for the advances. Okay, these are for the concurrent auditor. How a concurrent auditor should verify the advances. The point are almost same, that is checked by the statutory auditor. This is clear. Now just read this point. So ABC CA is appointed as a statutory auditor for the branch of the bank limited for this year. You are the part of the audit team instructed by your senior to verify the advances of the audit period. The area to be taken care while doing the verification during the concurrent audit. So how to check the advances in case of concurrent audit? Check this. Check the CBI guidelines and show the proper power and supervision. CBI guidelines, proper power and supervision. By C means claim to the ECGC and the DICGC. As we know that we get the 5 lakh tak ki guarantee. Okay, if bank gets sunk, we will get the 5 lakh insurance, free insurance. We know that, as we have read in the NBFC also. So check the claim to the ECGC and the DIGC submitted in time for this type. By B means bank guarantee issued, properly worked and recorded in the register. And by I means securities properly recorded and registered in the bank name against with the advances given. Okay, are registered in the bank name properly recorded. Guidelines. Classification should be done as per the RBI guidelines, standard, substandard, etc. Ensure proper power. To ensure proper sanction of advances. Okay, given to only those which are eligible, not to everyone. Power. The LC, letter of credit, are issued within the power. And supervision. Proper post disbursement supervision and follow up. These are used for the purpose taken and properly prepaying that, follow up the same, supervise the same. Okay, these are the points for checking the advances by the concurrent auditor. CBIC guidelines ensure proper power and supervision. Right now, these are important. Question is given, method is given. Now, the audit procedure for the foreign exchange. You are appointed as the concurrent auditor, and the main business at the branches dealing in the foreign exchange, such as the main area of coverage with regard to the foreign exchange transaction under the concurrent audit. Here we will check the foreign resident remittance contract, ensure the balance verification and compliance, BBC. Foreign resident remittance contract, foreign resident remittance contract plus में BBC, balance verification compliance, balance verification compliance. So by foreign means check the foreign bill negotiated under the letter of credit. By resident means check the foreign currency non-resident and the other non-resident account, whether debit credit permissible or not, as per FEMA, etc. Right? Remittance. Check the inward outward remittance properly accounted for. Now, balance. Okay, there is a contract also. Examine the extension and cancellation of forward contract for purchase, sale of foreign currency. That is done by the bank. That you have read in the AFM also. Balances. Ensure that the balance in the nostro account in different foreign currency are within the prescribed limit. So, what do you mean by nostro account? There can be nostro account, there can be vostro account. Okay, let's see this. So, nostro account and the vostro account. So, by nostro account, we mean our money on the deposit at your bank, account held by our bank in the foreign currency at another bank, bank held by the account held by the Indian bank in foreign country, foreign country bank and in foreign currency. Okay, the nostro account means account held by Indian bank in the foreign country, in foreign country, in foreign currency in the foreign bank, in foreign country, foreign currency, foreign bank held by the Indian bank. This is clear. This is a nostro account. What do you mean by the vostro account? It means your money on deposit at our bank. Okay, account held by the foreign bank in Indian bank, Indian currency, account held by the foreign bank in domestic currency at our bank, in Indian currency in Indian bank. Right? That is held by a foreign bank. This is a vostro account. उनका अकाउंट हमारे पास. Okay, nostro means our account with them. Nostro means their account with us. This is clear. So check the nostro account. Ensure that balance in the nostro account means our account balance in the foreign, in different foreign currencies are within the prescribed limit. Ensure the compliance of guidelines issued by the RBI head office for dealing with the room operations. Ensure the verification and reconciliation of the nostro and vostro account, their reconciliation, etc. Okay, for the forward exchange contract. Important, right? How to verify the advances given against the stock? Can be asking exam. See here. So how to verify the advances that are given against the stock? Examine the section letter, loan document, the title of the goods, proper or not, the stock document containing the quantity and the value, stock audit report, insurance policy, assigned info of the bank, and physically inspect the inventory also. These are basic point you can write in your own note also. Okay, so let's cover the question answer part for this and let's end this chapter. See there here. Your firm appointed as the central statutory auditor of a nationalized bank for this year. So during the audit, your audit team observed that a lump sum amount disclosed as a contingent liability. A lump sum amount is disclosed as a contingent liability collectively through the component are correctly identified. For a contingent liability, the auditor is primarily concerned with the seeking reasonable assurance that all the contingent liabilities are identified and properly valued. The audit firm intend to obtain a representation from the management, highlighting the point to be covered in their representation. We will get in writing from the management about that. This is important question. See here. So the auditor should obtain the representation from the management. Okay, in writing. In writing. All the OD document, note disclose, and director liability estimate. One second. Right. So we have to take all the OD document, note disclose. All OD document, note disclose, and director liability estimate. So by all means, all year end or the contingent liability should be disclosed. We will get in writing from the management as the acknowledgement their WR that all the year end liabilities are properly disclosed. CL are the records. Now by OD means, by O means all the OD document, OD document, OD documents, all is covered. Now OD document by O means all the off balance sheet transactions accounted in the books of account when taken place and entered into after following due procedures laid down and all supported by the underlying document. Okay, all the transactions are done in balance sheet proper as per the procedures and all the document are supported with them, right? So all OD document, note disclose. The contingent liability which is not disclosed on account of the fact that the possibility of the outcome is remote, very less, and their justification why it is not added, right? Now note disclose. Now director liability estimate. Director, in case of guarantee issued on behalf of the bank, director, guarantee is issued on the behalf of the bank director, the bank has taken appropriate step to ensure that advocate an effective arrangement made between them. Now liability, disclose contingent liability, don't include any crystallized liability. Okay, that means that a liability has arisen, it should not be covered in the contingent liability. Okay, it should be recorded as actual liability. In case of nature of loss, expense and so require creation of the provision, in that case we have to create the provision and adjustment in the financial statements. Now an estimate, the estimated amounts of the contingent liability are based on the best estimate as per the AS9, including the consideration of the possibility of reimbursement that we have to make in the future. So the amount of calculation of the contingent liability should be made by the following the AS29. So all OD document not disclosed, in that case we have to determine the estimate the director liability. All OD document not disclosed, in that case estimate the director liability, right? This is memory technique. Good question, can be asked in exam, remember this. You are conducting the concurrent audit of the branch. It is large branch having the advances of the 500 CR, including the export advances of 300 CR. Some borrower are also get the letter of credit issued from the branch for importing raw diamond. Okay, LC given by the Indian bank to the foreign bank for the import and by the importer in India, right? So from the diamond hubs of Belgium, you want to show that there is no revenue leakage in the bank branch for being you are focusing upon the advances. So discuss the 5 areas. Okay, when I teach student But I will get the money in form of fees. Now you pay me fees for the classes, so I will get the money plus. But I will get the love of student. Okay, I will get the money and the love from the students. Similarly, what a bank will get? A bank will get the money in the form of interest and the fees. Bank charge the interest, bank charge the fees, and bank will get the love, just like I will get from the student. Okay, so interest, fees, and love. Interest, fees, and love. So these are the bank income. You have to check their revenue leakage here. So area of the advances need to be verified. Discuss the five area. Discuss the five area for the advances to check that there is no revenue leakage. So bank get the interest, fees, and the love, LOV, love. Okay. So area of advances need to be verified. These are the interest rate paid in the system verified with the corresponding sanction letter. That can be changing from time to time. Check the rate properly that is applied here. Otherwise, there is revenue leakage. Okay, interest is done. Then fees. By fees means processing fees for a freshly sanctioned advances and renewed limit levied as per the bank guidelines and any revision in fees given effect from time to time. Otherwise, there is leakage of income for the bank. So interest, fees plus love. By L means sanction of CC limit. Stipulated the, okay, by L means limit. Stipulate to submit stock statement. Bank have to get the stock statement from time to time. You can say 3 months. So no submission can involve the laying of penal interest. Verify this. So L, then O. By O means verification of the overdue interest on the export bills, purchase and packaging credit facility. You can say it's a short-term loan. A short-term loan. A short-term loan given for the export purpose. Packaging credit facility. Short-term loan given for the export purpose. Check their overdue interest here. Okay. LOV. By V means verification of the charges and the commissions for letter of credit as per the circular, bank circular. Okay. Get the interest, fees, and the love. L means limit, O means overdue, and the V means verifications of the charges and commissions as per the circular, bank circular. Important question here. New add हुआ है. Now, CA Seema is appointed as the stock auditor of the Bhavani Rice Private Limited, availing the credit facility from the RK Puram branch near Tamil Education Society, New Delhi. The borrower is enjoying a CC limit, a cash credit limit of the 12 CR from the branch against the security of paid stock and debtor up to 90 days against the margin of 25%. Now, so she proceed to visit the premise of Bhavani Private Limited. Auditor visited the premise of Bhavani Limited, located on the outskirts of Delhi. She verified the books of account, stocks of the company, tax check the quantity of the paddy rice lying in the premise of the company. The drawing power of the 12.5 CR is computed in the stock report, and the report stands submitted to the bank. So after a week, the regular internal inspector appointed by the inspection department of the bank also happened to visit the same premise of the borrower and found that the rice contained the 5,000 bags in stock having the value of 1.5 CR was fungus ridden. Okay, this auditor checked the stock auditor checked the number of that bags, but she have not opened those bags to check whether they are proper or not. But in reality, these are get fungus, and the company was holding the stock for the last 15 months. So how to review this situation? How to view this situation above? This reflects that the professional work of the stock audit was not performed as per the diligently by the stock auditor. पर proper नहीं हुआ है. It is one of the important responsibility of the stock auditor to verify the condition of stock. And the auditor role is not limited only to verify the physical quantity. He has to check the sample basis by opening the bags also, whether the stock proper or not. Okay. So in the given case, she should have got opened the rice on the test check basis. Not all, but some. She come to know about the fungus. If she opened them, then they came to know about that now. But she had not opened them. Okay, you can say not performed work properly. negligence by him, her. So value of such rise should exclude the while arriving at the value of stock for the DPA calculation. So it shows that she failed to perform the work diligently and the DPA calculation in the report submitted to the bank not proper. Okay. Now, you opening a small branch with staff, strength of the manager, cashier and the theatre staff, S1, S2 and S3. Among the allocation of work for the other area, the S1 who is a PN open all the mail, PN opening the mail in the bank and forward it to the concerned person. He does not have the signature book as to check the signature on the important communication. Okay, that means their control are too weak. Okay, there's failure of controls. And the S2 has possession of all the bank forms, just like checks, checkbooks, demand draft, pay order books, and the traveler checks. He maintain a record, not properly, you can say. However, no among the staff regularly check that. You are required that inform that being a small branch with shortage of manpower, it is not possible to check the work record. Give your comments. The control are not proper there. Okay. So the bank required to implement and maintain a proper system of internal control that we have read in the lecture number 1, starting of this chapter. Bank have to maintain the proper internal control system for mitigating the risk, maintain the good governance level to meet the regulatory requirement. Some example are, which are bulleted here. These are the S1, who is a PN. He is opening all the mails and forward it to the concerned person. Note has signature book to check the signature of the important communications are not as per implementation and maintenance of the internal control. Not as per implementation and the maintenance of general internal control. These are break here. All the mails, as the mail should be opened, the responsible officer signature of all the letters and advances should be checked by the officer with the signature book only, right? And all the bank forms should be kept in possession of an officer, and other officer verify the issuance and the stock of such stationery. And the S2 has possession of all the bank forms. He maintain a record, not properly you can say, which verified on the test check basis. Contention of the bank small branch that they have shortage of the manpower. This is not proper. Okay, there is a high risk not maintaining the control. So auditor should report in the their report properly. Okay, good question. Now write a short note on the reversal of the income under the bank audit. Where bank have to reverse the income in these cases. If any advance including the bill purchase and the discounted becomes NPA at the year end, okay, in that case we have to reverse our income. Entire interest occurred credited to the income account in the past period should be reversed. Okay, if we have credited the account with the interest but it become NPA, not recovered actually, then we have to reverse the same. This will apply to the government guaranteed account also. Okay, for the government guaranteed account by the CG, that we have need not to classify as a NPA for CG guarantee, not SG for CG guarantee. But in the both the cases, SG guarantee cases and the CG guarantee cases, we have to recognize the interest only when they have actually received. Okay, if not received, we have to reverse them. For NPA, fees, commission and similar income that occurred should cease to accrue in the current period and should be reversed provided for or if uncollected. Similarly, the further, if bank which wrongly recognized the income in the past by mistake should be reversed interest if it was recognized as an income during the current year, okay, and make a provision for the equivalent amount which was recognized as a income in the previous year, the last year, then make a provision for the same in the current year. Okay, so in these 5 cases we have to reverse the income under the bank audit. Again, this is a good question. Now, you are the part of the engagement team conducting the bank audit. During the audit, you notice that there are large number of cash credit in the bank branch. Okay, these CC accounts are only partially utilized during the substantial part of the year. However, in the month of the March, the accounts are fully utilized in the last month. आपने check किया, on the checking, it observed that these account holders have made FD from this utilized amount at the end of the year. Okay, they withdraw the amount in the last month and make the FD for that amount. These deposits liquidated in the first week. Again, they liquidated the amount in the first week of next year. So they are doing their window dressing. They are showing the high FD in the bank. Okay, they are doing the window dressing. Fake account. The bank showing the fake account, window dressing. So reporting of irregular advances. In the given case, copy the question. This is the example of window dressing. So utilization of the advances, placing of FD at the year end in the branch of the and again the liquidation of the deposit in the next month, beginning of next month. You can say next year, beginning next month, indicate that the branch is resorting to window dressing to inflate its advances, also deposit artificially. So we have to verify the whether unavailed portion of the credit facilities, you can say overdraft and CC, are used to boost the loan and deposit, which might amount to window dressing. The relevant regulatory requirement also prohibit such kind of practices. These are totally wrong now. And the conclusion is that the auditor required to report the matter in the audit report, also comment in the LFAR. In appropriate case, making the qualification in the main report, we will qualify the report, right? Okay. Now, okay, there are some question pending. Let's end them. So, Messrs. GH Associate appointed as a SC of the BNB Bank, nationalized bank. Its headquarters is in the New Delhi for the financial year 2022 and 23. Bank function in the automated environment using the FLC software. So while preparing for the report on the partners, highlighted that the some matters covered by the company's account requirement of the CARO 2020 reporting. Answer this. To which authority the auditor should submit their audit report? The list covered under the Companies Act 2013 reporting requirement under the CARO. Okay, so we have to report to the CG. In case of nationalized bank, SBI, we have to report to the CG. Okay, this is covered in above topic that we are read today. Now, list the matters. The reporting requirement under the Companies Act not applicable in case of the nationalized bank, but in case of the banking company, following need to be reported. Okay, so reporting requirement of the under Company Act not applicable to the nationalized bank. Okay, but these are applicable in case of the banking company only. Here matters as stated in section 143.3, advocacy and vetting of effectiveness of internal control and other matters, right? And reporting requirement of CARO applicable not to the nationalized bank, okay, and banking company. CARO not apply to the bank. Remember this. Report to CG, CARO not apply to the bank. Check the these requirement in case of banking company, not apply to the nationalized bank also. Only the banking company apply. Okay, these are extra point, not covered above. Extra point, new point, not covered above. Learn this, important. These are the. Now, PDSJ and Associate are the statutory auditor of a scheduled commercial bank for the year 2023 and 24. So while evaluating the internal control over the advances, it come to their notice that the classification of the term loan borrower accounts into the SMA as well as NPA is done in system in following line. So what do you mean by the SMA and NPA? NPA, we know that. Okay. So by SMA means SMA account in the banking as per the guidelines issued by the RBI. If any individual fail to repay the loan EMI on the time or default on the EMI payments, then the bank classify the loan account of the individual as a SMA, special mention account, and NPA. Okay, you can say in the 30 days it become the SMA1. It's covered or not? Not covered. In the 60 days it become SMA2. In the 90 days, it become NPA. Okay. So in the first 30 days, it become the SMA1. Second 30 days, you can 60 days, it become the SMA2. 90 days, total 90 days, it become the NPA. Okay, these are the SMA1, SMA2 and the NPA. This is clear? Yes? Okay, ठीक है. Now, see here. So they have given the following lines that we have made there. In case of full dues are not received on a particular date, dues not received, a borrower account is immediately considered as the overdue on the very next day. Example, the due date of loan account is 31st March. Okay, the date is 31st March on the due amount. The due are not received on 31st March. It is considered as overdue on the 1st April. So we have to consider it overdue on the same day. On same day. On 31st March itself. Not on the 1st April. Okay, because the last day is 31st March. We have to consider it as overdue on 31st March itself, not on the next day. They are doing the wrong thing here. Consider them as overdue on the same day, 31st March itself. They are doing the wrong treatment here. So if it is continue to remain overdue, okay, remain overdue, then account is tagged as SMA1 on 1st May. Okay, it become overdue on the 31st March and 30 days end on the 30 April. So it will become thus SMA1 on the 30th April. But they are making them on the 1st May, on next day. Again, wrong treatment. It become SMA on the 30th of the April. Now, if it continue again continue, remain overdue. The further then the account is tagged as SMA2 on 31st May. Okay, for the May month, again count the 30 days. 30 May, it become the SMA2. But they are doing it for the 31st May. Again, one day later. Wrong treatment. If continue to remain overdue, again continue. Even being tagged as SMA2, it classifies NPA on the 30th June. For the May, is a 31st month day, then the plus 1 day, plus 29 days of the June. For 29 of the June, it becomes the NPA. But they are making on the 30th June, again 1 day later. They are doing the wrong treatment. They are taking it the next day, but take the back day. They have to take the back day for the correct treatment. So evaluate above control designed by the banking system for the proper exercising of internal control. Okay, RTP May 24 question. So designing of above control instituted by the bank in the system is not proper as per the requirement. Right? Now, see here. So any amount due to the bank under any credit facility is overdue if it is not paid on the due date, which is fixed by the bank. So it become overdue on the same date, 31st March. Okay. The borrower account are flagged as the overdue on the same day, 31st March itself. So classification of the borrower account as a SMA NPA is done at the end of the part that day end. Okay, not on the next day. So SMA NPA classification date is the calendar date for which the day end process is run. In other words, the date of the SMA NPA reflect the asset classification status of an account at the day end of the calendar date. So in the given case, the due date of the loan account is 31st March and the full due are not received here. So it runs the day end process for the this date, and the date of the overall shall be 31st March itself, not the next day. If it continues to remain overdue, then this account shall be tagged as SMA1 on the 30th April on completion of the 30 days. Again, SMA2 on 30 April. Similarly, if the account continue to overdue, SMA2, then the NPA. Okay, as we have discussed here. Similarly, we have to write here. This is clear 100%. Okay, say yes. Okay. Now, next question. RML and associate are one of the joint auditor of the IND bank for this financial year. While auditing the IND bank, they are analyzing the industry data for the NPA, select the public sector banks as a risk assessment procedures. their bank name, their gross NPA, net NPA, and ratio of net NPA to the net advances. In the above context, what you understand by the gross NPA, what you understand by the net NPA as on the reporting date in the context of the financial statements of a bank. As an auditor of the Ind bank, what interference would you draw by comparing the ratios of the net NPA net advances with other public sector banks? Explain the gross NPA, explain the net NPA, explain this ratio. Okay, so the gross NPA represent the opening balances of the NPA. These are the opening balances. Increased by the fresh NPA means old NPA plus the new NPA, and reduced by the upgradation means NPA recoveries and the write-off. Less the recovery and write-off. Old NPA, new NPA, less the recovery and the write-off. These are the gross NPA. What do you mean by net NPA? The net NPAs are the arrived at after the deducting the amount on the account of total provision held for that NPA. We have to make the provision for the NPA now. So let the provision from this. And balance in the interest suspense account to park a current account to park accrued interest on the NPA and certain other adjustment. Okay, in simply you can just reduce the provision from the above amount. You will get the net NPA. And ratio of net NPA to the net advances. The net NPA to net advances ratio is higher in case of Ind bank. In case of Ind bank, this is higher, 3.97%. So what it indicate? This indicate that there is a risk that bank may not have able to made to require the provision as per the RBI guidelines. A higher net NPA to net advances ratio indicate possibility and risk of under provisioning. So net NPA to net advances, you can say they have not made required provision. This should indicate whether their provision are made enough or not. Okay, you can say lesser the better, lesser the better. So the higher one is wrong one here. Keeping in above, the audit procedure have to be tailored toward the examination and verification of the crucial area. Okay, okay. Now, NRF Bank Limited is suffering from the huge number of NPAs. During the month of April, the management of the bank decided to sell some of the NPA. So question is about the sale and purchase of NPA. The management has selected this NPA. This one, this one, this one, this one, this one. For this amount, this amount, this amount, and this amount. So being an internal auditor, you are required to check the proposal made by the branch. So in case of sale by the bank for the NPA, explain the general point that we have covered above. General point, then for the purchase, then for the sale. Right here, general point, common points, right? Now, specific point for the sale only. Common point, then explain the sale value point. Now, in the given case, code paste the question including the table. Here. In view of above mentioned conditions, the auditor required to ensure that only those NPA which are remaining in the NPA in the books of account for at least 2 years. We can sell those NPA which are remaining in the bank's books of account at least for the 2 years. We know that, right? So we are doing it for the year April 23. Right. So considering the fact in the question, all the NPA except for the dairy works are prior to April 21, means 2 years prior to the April 2023. You can say 22, 23 and 21, 22. These 2 years they remain in the bank's books of account. Okay, at least. So it should be before in the books of account of bank. Okay, if it cover in the books of account in this year, then it should not be sold in the next year. So this 21, 22, this can be sold, this can be sold, this can be sold, but the 21, 22 is covered in this year. Okay, they have to sold in the next year by giving it 1 year more. Okay, it should not be sold in this year. So this one, dairy works, are prior to the 2021. Accept this. Okay, so in view of above provisions, the management of NRF Bank Limited can sell the NPA except for the NPA of the this much amount for the dairy works. This should be remained in books of account less than 2 year duration. That in simple word, the NPA should remain in books of account for the 2 years. Okay, less than 2 years, then we cannot sell them. Okay, this is clear. Chapter is over. So goodbye दोस्तों, goodbye.